afternoon, everybody. Welcome to the TraderMerlin Show. It is your Wednesday afternoon edition. It is Wednesday. I hope you guys joined us with bar chart this morning for the 5 kind of questions to ask yourself before you jump into the crypto world. If you didn't get a chance to see that one, I will post a link in the chat here shortly. You can go to barchart.com, click on Learn, and then you'll see webinars, past webinars. It should be up by now. Wasn't quite sure. Your first lyric in the wild, huh? All right. Hey, before you start, just wanted to tell you thank you. Oh, yeah. Hey, Roland. Always a pleasure being there. Anytime you want me, I'm happy to come over. That was fun. I enjoyed it. A little stressful to prep, but once we get going, that was just kind of fun and free flow. So yeah, it's great. And again, you guys check it out at Bar Chart. I will post that one in here. Oh, it's also on YouTube? Cool. I know they post on the barchart.com site under the Learn tab. Okay, let me real quickly just dive into this topic today. I'm going to try to do the best I can. This is not going to be a deep dive into fundamentals or anything like that. But I did a show, I want to say a year and a half ago, where we looked at kind of the high-level view of the EV space. And at the time, couldn't have been hotter. Now it's still hot, but it's definitely cooling off quite a bit. So I want to kind of recap that and definitely bring up some of the points that Tom makes, which is Tesla's going to come crashing down, right? The price of Tesla, because they had such a high PE ratio. Although, Tom, you were saying a 1,400 PE ratio. I'm seeing their trailing 12-month PE ratio is only 79. So not 1,200, but it could certainly come down a little bit. Anyway, let me show you the graphic here. I put the winners and losers in the EV race. And I wanted to start with this topic because there were so many companies that came to market in the last couple of years. And this was kind of the similar topic to what we talked about on Bar Chart's webinar today, which is there's so many that pop up in the cryptocurrency space. For example, it was funny talking to John. He was like, yeah, there's like, a couple thousand cryptos. I'm like, well, there's 26,000. And by the time we finish making that statement, there's probably going to be even more of those cryptos out there. So when something's hot, everybody in the world wants to do it to try to capitalize on it and make a ton of money. Now, with crypto, it's easy. 7 minutes, I make that thing. Easy to make. With autos, very hard. And this is the point that Elon Musk made a while back, which is, it's one thing to have the idea to make a car company and get it all going, but getting all the infrastructure, getting all your tooling done, and then getting all that stuff to finally make the car and it's daunting. It's a tremendous amount of work to get that done. So I thought I would real quickly go through a graphic I found, very appealing, by the way, very interesting, which runs through some of the major companies. And I'm going to run through a lot of different companies here. We'll show you some of the cars, take a quick little peek at maybe what the car looks like and some of the very basic fundamentals. I'm really just looking at things like PE ratio and earnings per share, right? How much are they making? Are they making anything? And the surprising thing here is I think almost every car company I'm going to bring up here today, except for 4, are losing money. So let's start with this list, which is a great one. Notice up at the top, now it didn't say when you put your money in, but there's a column there that says the current value of $10,000 invested. I'm assuming, and that we know what assuming does, makes an ass out of you and me, but I'll just have to deal with it for today, that's on the IPO price. So if you bought Acromoto's IPO, which I don't think is around anymore, you would be down 100% of your investments because I think they're gone. Then you've got, lovely Nikola, right? We've talked about Nikola in the past, NKLA. I will bring up that chart here and bounce back and forth with Nikola. Nikola was a great idea. Conceptually, it looked fantastic. Here is your, back in January 2021. Yeah, here's the thing. So, okay, good point. Maybe their PE ratio was 1,400 back in January of 2021, but their earnings have been soaring. Like they've really made a huge jump up in the amount of earnings per share. That way, that PE ratio has dropped from, and that's right. You've been saying it for a while. So yeah, okay, we've come from 1,400. Now we're at 79. Do I see it getting back to the industry norm? Let's wait to the end to get to that one. So here's Nikola, and I was harping on this one back when we started this show back in 2020. When we saw this big spike, remember this was a SPAC, it shot up like crazy and then has just become crashing down. Now I think, let me just see where Nikola is. I brought them all up here. I thought I had Nikola on here, which was the big truck guy. Let me bring up Nikola. We'll go Nikola Trucks. See if it comes up. Nikola Motors. Looks great, but there's been so many scandals and just problems behind this one. And then you had partners that were pulling out of that deal. Nikola is making no money, right? They're losing hand over fist. So this is one that was a great pipe dream, but just never made it to fruition. Now I'm going to keep going down this list from the top. Let's start with, that was Nikola, down 99%. If you invested $75 at that IPO price, or sorry, $10,000 at the IPO price, you'd have $75 left. Hashtag use a damn stop loss. Now Lordstown. Lordstown was the next on this list. You'd have $65 left if you had Lordstown on a $10,000 investment. And here is the chart of Ride. You know, and part of the issue is here, Foxconn gave them backed out of some deal and they didn't get the parts that they needed, the pieces they needed to make their vehicles a reality. And they are pretty much done. You know, they, I guess, going into bankruptcy for Lordstown Ride. I know some people thinking, oh, it's going to have a bounce. I wouldn't bet on that one. I would just leave Lordstown alone. I think you'll see a lot of these companies disappear, and maybe some of the assets get sold to other competitors, which is why I wanted to do this one so you can see all the different pieces here. Oop, I don't know why I have John Rowland's name on the screen. Let's get rid of that. There you go. Sorry, John. That's from yesterday. So that was Lordstown. Now, as we go down this list, there's a few in here that I wouldn't touch with a 10-foot pole. There's other ones that I'm extremely excited about if they make it. So for example, Faraday. Faraday, if you put in $10,000, would be worth $158 today. Faraday's ticker symbol is FFIE. We looked at this a while back. You know, Faraday Future Intelligent Electric doesn't look so intelligent now. This was, again, one of those SPACs. Remember the SPAC craze we saw back in 2020, where it was at $10, shot up to 22, and now you're at 21 cents. Crazy to see such a slide. Now, Faraday actually has a very nice looking car. There's your Faraday. Well, I say nice. It looks like some kind of futuristic pod that would be, you know, rolling around Mars or something. But I kind of like that one, right? Not too bad. Pre-order, probably not going to order from a company that's probably going to go bankrupt. But I think it looks really cool. Personally, I would not be comfortable buying a car company that I was not sure if it was going to make it. Because let's say you buy a Faraday and you like the look, performance, whatever you might like on it, and they go bankrupt, good luck getting parts for it, right? So what's one thing that's nice about Tesla is now there's so many Teslas on the road, parts are going to be easier to get. It's going to start to become cheaper to fix those things just because there's more parts available on the road. All right, so that was Faraday. Let's go down the list to the next one. Canoe. I've mentioned this one before. I like Canoe. Canoe is one of the weirder looking ones, but it's one that I actually like. Ticker symbol is GOEV, Go EV. Now, Lordstown that we looked at earlier was losing $18 per share, that's a bloodbath. Go EV is losing $1.41 per share, which seems to be somewhat close to the normal, losing about $1.30 to $1.50 per share on these electric vehicle companies. But again, this one, the reason I like this so much is we live in a society where you have all these Amazon trucks driving around. The UPS trucks, those what can Brown do for you type trucks. And while those are great, they're big for all intents and purposes and may not be the right vehicle for mass transportation and shipping of stuff. The Canoe stuff, let's bring that one up. Let me get rid of the Nikola, and here's the Canoe. I don't know why it's right. These are really simple, cool electric panel vans. It's almost like the 2023 version of the VW bus. They can be done a lot of different things. They're fully modular. They're just little pods, if you will, which I think are actually very futuristic. Very futuristic look, but they're just not doing well right now. Down $1, losing $1.41 per share. Not looking good. And I'll bring up that Go EV chart. At 43 cents, I actually have a little bit of money that I'm thinking it might be in the gamble account. And I am debating throwing some money at Go EV, which is Canoe, because I like their product. I think it has a nice adoption appeal. When I look at things like Faraday and I look at Lucid and I look at Tesla, they're competing for like the sedan marketplace, and that might get a little bit crowded. And again, hard to deal with a crowded marketplace of sedans when Tesla leads that category hands down for the electric sedan. Tesla doesn't have an electric truck, a van type thing. So I'm looking for that, at least if as an investor, I'm looking at it from a differentiating standpoint. Naum says, who's manufacturing the Amazon EV? I'm not sure. Someone can probably look that up real quick and tell me online, but I'm not sure who's doing that one. But was it Canoe? I think that Amazon had some deal with Canoe where they were buying some from them, but I don't think it was all of them. I don't think it was a lot of them. I'm not sure. So let me continue on down this list. So that's Canoe, which is probably, for so far, the only one of the names that I've mentioned that I even consider buying into. just because I like what they have. They're a different product, and they're based here out of California. They are, if I remember correctly, I think that Go EV is literally right up the road in like Torrance. Michael says, I would wait for the reverse split. Sure. You know, I mean, look, as if we go off the charts, you know, my comment, the trend is your friend to the bend at the end, and there has been no reverse here. I mean, this thing has just been nothing but down. So, you know, this is going to be certainly risk capital where if I buy a few $1,000s worth of it, I have to kind of have the mindset of this could go bankrupt. And most of the companies we're going to look at here are bankrupt. That's why I like this list that we have here, because Acromoto gone. Nikola's probably going to go under. Lordstown gone. I don't know if Faraday's going to make it. I've never even seen a Faraday on the road. Canoe I've never seen either. Workhorse. So Workhorse was another company out there which makes, that may be the one that Amazon was working with. Because they make distribution trucks. So let's see if we can find their Workhorse trucks. Right? That's Workhorse trucks. I can get a graphic up here of them. So they look like those vans that you get for your UPS delivery or your Amazon. So there's the W4CC, fully configurable class 4 chassis. You know, this is definitely one of those pieces that separates it a little bit from the industry. Again, it's not competing with Tesla yet. At some point, I could imagine Tesla getting into a heavy equipment. You know, they're already trying to do the semis, but they don't kind of have this mid-range box truck type thing that it looks like Workhorse is doing. So cool. Right, there's your basic model. You just basically buy this chassis and you put your box on it, and cool, fine. Is Rivian moving from the NASDAQ, or removed from the NASDAQ? Can you still buy shares? Yes, I believe you can. Rivian, for sure. Yeah, it's still in the NASDAQ. So typically when you look up something here, you can see where it's listed right at the top. So it says Rivian Automotive, NASDAQ. So yes, definitely still traded. We'll get to Rivian in just a second. I want to make it down this list a little bit. I know I'm kind of going slow, but I got like 20 different car companies to talk about, and then we'll finish off with Tesla and then kind of summarize it all here at the end. So bear with me. Again, I did not have a week to prepare for this. This was literally about a half an hour for me to prepare for this presentation. So Workhorse. Okay, I might put a little emphasis on Workhorse. Why? Because it fits a need, and this is the topic we had with John Rowland today at Bar Chart, was part of this cryptocurrency thing is where's the need? Where's the disruptive technology, right? Where's the EV that's filling a market niche that's not there? Because I know you all agree with me. I don't think anybody can argue it, and if you do argue it, please let me know why. But I'm willing to bet you would all agree that, yes, Tesla leads the sedan market right now, but Honda, Toyota, Nissan, BMW, Mercedes are all going to have competing sedans. So to try to jump into that space as a startup, in my opinion, stupid. I would never try to jump in that arena now as a startup. So when I run through this list, if I see a car company like Fisker, well, it's more of a luxury car, but we'll call it a sedan, Faraday, I would shy away from those. The ones I'm looking for now are the ones in that niche space that may not have it, like Canoe, Workhorse. There's a couple other ones here I will get to in just a second. It was supposed to be removed on January 22nd, replaced with, I didn't see that news. Let me see. I didn't see that one, Mary. All right, let's keep going down here. So we had Workhorse. You've got Hyliion. Personally, never really heard of Hyliion. Let me see if I can find. I think I actually brought their webpage up. There's Lee Motors. I didn't bring up Hyliion, but you'd be down 97% on your Hyliion investment. If you had Proterra, you'd be down 295%. Tesla had 2 Tesla estimates to write today. Really? Chris is a mechanic up in Northern California. If you're in the NorCal area, not a mechanic. He's a repair guy. Get in an accident, he'll pull them dents out and make it look brand new. You want to turn your 68 Chevelle coupe into a convertible? He might be able to do that for you too. I'm assuming now, Chris, that for you, at the beginning, it was kind of tough to find any sort of replacement parts, fenders, fairings, stuff like that. Now it's probably getting much easier given just the sheer number of Teslas out there and then accidents. So pick and pull part place is going to have a lot of Teslas here in the near future. You had Lions Electric. And then we get to the bottom of the list, which are companies that are still surviving and doing well. So let's kind of focus on this last 3. These were all supposed to be quote-unquote Tesla killers. You see Rivian. Now, Rivian, kind of got to hand it to them. They put out a nice vehicle. It looks pretty nice, and I will bring up a Rivian page here for you. Rivin. There's actually 2 or 3 in our neighborhood. I'm here in Southern California, where they are based out of Irvine, California. So obviously there's plenty of Rivians around. You know, it's actually a nice looking truck. I do like the truck. What I can't stand are the clown headlights, but you know, got to make yourself different somehow. Can you turn my 67 Chevelle into a Tesla? Now that would be cool. You know what? Hey, you joke about that, Michael. I think you're going to get a period come here soon where you'll be able to take the skateboard, and that's what they're calling the whole battery pack chassis with wheels. You'll be able to take that skateboard from a Tesla or from some other electric car company and take your body of your 67 Chevelle and drop it on top of that bad boy and have a fully electric Chevelle, which would be very interesting. Although, come on, let's be honest. Part of the lure of a 67 Chevelle is when you step on that gas pedal and the whole thing just goes, whoa, 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 and the thing shakes. You feel like you're just, having an earthquake inside. Whereas a Tesla, you stamp on the gas pedal and you go one direction, your head snaps backwards. Weird. Collision shop. No more restorations? What? Oh, that's the good stuff, Chris. That's the creative side. And Big Ed was talking about Hyundai Ioniq 6. Nice sedan, under 60 grand. Right. My point exactly. There's so many more. I forgot to mention Hyundai and Kia also coming out with electric vehicles. There's a company in California converting any vehicle to EV. Yeah, when I had my, I had a 1955 Porsche 550 Spyder replica, by the way, just so you know, because that's a multi-million-dollar car. I was looking at potentially swapping it out and making that electric, but I moved away from that one. Anyway, Rivian. They make a really nice vehicle. I'm seeing them on the road a lot now, in which, this is the challenge. You have all of these companies on this list. Now, I don't want to sound condescending, but I'm pretty sure that none of you, not one of you, has seen an Acromoto, a Nikola, a Lordstown, a Faraday, a Canoe, a Workhorse, a Hyliion, a Proterra, or Lion Electric on the roads, right? Probably haven't seen any of those on the road. And that therein lies the tough part, is why those companies are going to fail. They just haven't cracked the market and gotten out there and had distribution where all of a sudden their vehicles are on the road. Now, Rivian, I'm seeing quite a lot of them down here, right? There are quite a few Rivians on the road. I like them. I'm just starting to see the SUV. So this one you see here on your screen right now is the R1T, ready to go. But they also have the RS1 or R1S, which is the same skateboard, is the same chassis. They just throw on a different shell, which I think looks pretty cool as well. Looks a little bit like a Range Rover, kind of a nice vehicle. And right now they're out there. Now here's the question: is Rivian successful? And the answer is no, they're not. They're struggling as well. Now I think did I pull up Rivian's numbers? Of course, of all the ones. If we look at somebody like Canoe, that's losing $1.41 per share, right? $1.41 per share is what Canoe is losing, and they're not out there yet. Just guess. No, don't look it up. Just guess. What do you think the losses per share for Rivian are, right? So you look at Rivian. They're clearly selling vehicles, so they've got them on the marketplace. It seems like they've got distribution. Maybe Rivian dealers. I know you can buy them directly from the site, but they're out there, right? I'm seeing them on the road. My mind instinctively tells me that that's going to be a much less of a loss because they have vehicles on the road. What's interesting is they're losing a lot. They're losing, I had it written down here, one sec as I bring it through, $6.51 a share. So they're losing almost 5 times as much money as Canoe, and Canoe doesn't even have a car out there yet. Now, that might be why they're not losing as much money, but I thought that was interesting. Rivian looks cool. Their share price doesn't. Right, let's look at the Rivian share price. You've really been just stuck sideways here. Yeah, I'm seeing more Polestars. I don't think Polestar's publicly traded. I don't think they're publicly traded. I might be wrong on that one, but as I ran through my list, I have a list from a previous show I've done. Didn't see them on that publicly traded list. And they're California as well, so we're kind of the hotbed for EVs. But Rivian, I wouldn't touch it right now. I don't know why I had this line at 34.28, but put a line right across these most recent highs. Until you get above 16, I wouldn't touch Rivian. Right? It's going to have to take something to get it back on track and moving to the upside. What I would be doing also is looking at earnings. So if I go back here and look at earnings from November of 2022, they lost $1.57. You go to 2023, they lost $1.73, and then they lost $1.25 at the most recent meeting. So their losses are getting smaller, but annual losses Pretty high, $6.51 per share. That is very, very bad. So let's go on from Rivian. And then you got Lucid. So Lucid was hit by some news today that some of the insiders are buying a ton. Is Polestar Volvo, Chris? Did not know that. Huh, interesting. Well, I guess that goes to my point that every car company is going to be coming out with a sedan. The Polestar looks pretty interesting. I saw a couple on the road around here last week. Looks kind of smushed to me. It's got like a really fat, smushed back end. Anyway, so Lucid, down 90%. So if you bought $10,000 worth of it at the IPO, you'd be down to only $957. So let's look at the chart of Lucid, LCID. At this moment in time, Lucid is struggling as well. Lucid has no PE ratio, and I didn't write down exactly how much they're losing per share, but we can go back and look at the last 4 quarters. You got a loss of 33, a loss of 40, so we're at 73, a loss of 28, so you're at $101, and then they lost another 43 cents. They're losing $1.44 in the last year on their earnings. Not really good, and the chart shows you that, right? They're just not performing well. So for anybody who's looking at these companies we've mentioned so far, I think an important piece here would be to wait for it to start to move to the back to the upside. All of these we've looked at have had a pretty steep downtrend. Rivian actually traversing sideways, which is a positive sign, but I would still wait for it to break to the upside. Again, I think they have a big obstacle to break through, which is mass adoption. It's mass adoption that turns any one of these companies into the next Tesla, right? If you want to use that as the benchmark. Because all these companies, when they came out, were supposed to be Tesla killers, by the way. So here's another one, NIO. I've got NIO, Xpeng, and Fisker left. I'll leave Fisker alone because I'm not a big fan of Fiskers. Remember, they got bought by the Chinese. They were a nice company here in Southern California, and then they got some company from China bought them up and rekindled it. They're kind of cool looking, but from what I've been reading, maintenance nightmare. Anyway, NIO. NIO's another really popular one, and that one is publicly traded. That is on the New York Stock Exchange. Here is the chart of NIO. I will admit, it's starting to look better, right? We've started to make some new highs. At least we broke this most recent high from May of this year. Made a new low also. So now the question is, can we continue to make higher lows? So this most recent low we made just a couple of weeks ago, actually just last week, and actually on Monday. So this low put in is a good sign, right? Making higher lows and hopefully start to make some highs. So NIO is starting to look pretty good. Here's what NIO looks like. Again, it's in that sedan market. So, but remember, NIO is also out of, I believe they're out of Shanghai, China. They have no PE ratio at all because they're not earning anything. They're losing money quarter over quarter over quarter. But kind of has a Tesla. It looks like a Tesla Porsche Cross, like the Porsche Cayenne Tesla Cross to me. So a nice looking car, but all in all, not performing well. I haven't seen any on the streets. I think in China they were actually fairly popular, but that's hasn't been able to crack that U.S. market. Second to last, Xpeng. That'd be down 88%. And Xpeng looks like this. Here is your Xpeng vehicle. This looks very similar to a Tesla, right? It's got a slightly different back end, but the style overall looks pretty similar, right? So there's your Xpeng. So what's their chart look like? All right, I'll bring that one up for you. I believe Xpeng is XPEV. Similar. Really, this kind of the same picture we just looked at. Sideways traversing, starting to look better, but just hasn't been able to crack to the upside. Now, the thing that bothers me for a lot of these companies, and I mean NIO, Xpeng, Li Auto, which we'll look at here in just a second. Who else? You got a few of them. They're out of China. Now, China, I think, has a competitive advantage because of their cost of labor and parts manufacturing. However, there's always that quality concern from China. I'm sure they'll have to jump through hoops to meet standards here in the U.S., but they'll probably be pretty decent cars at a much cheaper price point. The question is longevity, and you know, there's not too many mainstream market Chinese cars that we see on the market today. There are some. There are definitely some, but not the hub for amazing quality vehicles. What else do I have on the list? There was Li Auto, which I'll just bring up that one. That's another one. Here's Li Auto. All right, so Li Auto is this company here, and this chart looks actually really good. It's very different than all the other ones we've looked at. Now, it's still showing consolidation, but since the lows of October of last year, it's really been looking pretty good, making some higher highs, higher lows. And here is the chart for Li Autos. Again, China, new energy vehicle market is what they're targeting to get to. It's kind of a weird basic site. I'm not a huge fan of that one, but it is what it is. But the chart looking better of the bunch that we've looked at. Now, none of these hold on. None of these companies yet have turned a profit. All of them are losing money. Now, that's not to say that any one of these can't jump in there, but when you look at PE ratio as your metric of success, all of these companies are failures then, if we're using that as the metric of success. Of course, I don't think we should use that as a metric of success, but it's just one piece that tells us, how they're doing. Is the gap narrowing on earnings per share, or is it getting wider? That would be another interesting study to look at, but I just didn't have time to do that today. So, out of all of these, it looks pretty bad, right? None of these really look like jump off the chart as being great. For me, the only one that, FSR, the only one that I was looking at that I was thinking to myself, hey, I might actually look to buy this one was Canoe. But again, I'm going to wait on buying Canoe, even though it's only 40 cents or something, until it starts to turn. Here is Fisker, one of the last ones I didn't get a chance to bring up. There's your chart of Fisker, which was a very popular one. Really nice looking style cars, really cool looking sports car almost. But that chart says stay away from it. Keep shorting it until it starts to move back up. If we look at the quarterly earnings, you lost 36 cents, 49 cents, 54 cents, and 38. So while it was a 3-quarter slide, their most recent quarter, they came up a little bit, but still losing money quarter over quarter over quarter. All right. So that's your main list here of competitors. Now, I bring that one up because we talked in the past about so much competition coming into the market, and that's true. A lot has come in. However, it has not been these companies. Rivian and Lucid, I would say, and Neo maybe, I would say, are the ones that might make the survival list here. There's one that's not on this list, which is an interesting one. You guys may have heard of BYD Motors. I think it stands for Build Your Dreams, and Warren Buffett was a big investor in this one as well. And while I like the company, here's the car. Again, just another simple looking sedan. This is the BYD Han. I think is there other motors styles? Just the Han for now. Warren Buffett has been unloading his position. So at his most recent meetings, he has disclosed that he's been selling off. He did not give any reasons. He has 10% of the shares that he initially started with of BYD. So that's kind of a discouraging sign. If Warren Buffett is selling your shares, that means something's bad. If he was really confident, and like he usually is, he wouldn't be selling. Okay, so we spent the first half hour of the show just looking at failures, looking at companies that haven't quite cracked the code, right? Elon Musk was laughing when Lordstown, and I think it was also Rivian, were making comments about how things are going really good, and he's like, yeah, great, yeah, you guys designed it, now you've built it. Now you got to mass produce it and get distribution out there. Good luck with that, And maybe he's just being a snarky a-hole, but he's right. This is a huge task. I remember, what was his name? Oh my God, Ruben. You guys remember Ruben? Ruben was on the show years ago when he first started. Actually, it was Power Trading Radio back then, and we started this show. On Power Trading Radio back in, I would say 2018. He was all in on Tesla. Tesla's so great. Tesla's so great. Tesla's so great. And I was the guy, I admit when I'm wrong, I was the guy going, dude, they've got so much freaking debt. They were so in debt. They have not turned a profit. They're losing money quarter after quarter. And I was like, stay away from it for now. Well, they fixed that situation, and Tesla's gone absolutely gangbusters since then. They've cracked that code. Now, that's why they're being rewarded with such high PE valuations that certainly have dropped because their earnings have been surging. So I want to get to Tesla in a second, but I want to just look at other car companies. So everyone I just mentioned, losing money. Every one of them that I've just showed you charts on. Forget Tesla out of that equation. That's coming up in a second. But they're all losing money. Okay, so what about the competition that I think is going to really be the big challenge for them, like Ford? You got the electric Mustang. So here's your Ford chart. Ford looking great. Ford not losing money, right? You can go over here. Ford reported 51 cents per share profit in their latest meetings. They're also paying a 60-cent dividend. I think overall for the year, they made a trailing 12 months, they made a 74-cent earnings per share profit. And the current PE ratio is 19. So the reason I bring this up is Tom made a good point yesterday, and this is the tough part with growth stocks versus value stocks. When you look at Ford, do you think of Ford, and you guys type in the chat, what do you think? Is Ford a growth stock or is it a value play? Right? If you don't know the difference there, a value stock is typically a company that's been around for a long time. They've got a very stable set of products or services that they offer. There's not a lot of like colossal growth opportunity to see that company just explode to the upside. That's a value company. Growth is extremely high PE ratios. They are typically, they're bid up in price because the expectation of what they might do a couple years down the road, right? So with Ford, it's a value play. Now, the EV gives them a slight, like, oh, maybe there's some growth opportunity here, but overall, Ford's a value play. It's a mature, saturated business in the US, value for sure. So when I look at Tesla versus Ford, I can't put those in the same category, although I do agree with Tom that the prospects of growth for Tesla are certainly slowing down because they've cracked that market and now they're right there with the major players. Ford is value. You can calculate the value, no hype. Yep, exactly. And again, I think the growth aspect there is it's the unknown market segment that Ford just got into, EV space, right? Is this a catalyst for growth for Ford going forward? Might it be able to get their earnings to go a little bit higher? Maybe we see the PE ratio jump because people are estimating that Ford will be more successful because of electric vehicles. That could certainly happen. And I think you're seeing that reflected, at least in the past few months, have really shown, nice positive moves up here for Ford. But historically, you're well off those long-term highs. But as I mentioned, here's the big difference. Growth companies don't pay dividends. A growth company says, I'm taking all of my earnings and I'm putting it into R&D, growth, expansion, infrastructure, tooling, whatever. I'm taking all profits and putting it in there. Ford pays a dividend. Why? Because they got all that stuff already. They're trying to entice you to buy their shares. So keep that in mind when I read these next few off. So that was Ford. Then you got their cousin, sister, brother, I don't know what you want to call it, General Motors. While General Motors has done really nothing since May of last year, General Motors is getting into that EV space as well, but they are a value play. General Motors, 36-cent dividend, paying $5.56 in dividends. I had to double check that, and I'll bring it up here just so you guys can see. Let's go, 1 second. Let me bring up GM, because I was like, what? You're paying that much in dividends? $5.56 per share dividend for, hold on, actually, let me make sure that's not right. That's earnings. The dividend for General Motors is 36 cents. Its EPS was $5.56, but I will bring it up here just so I make sure my numbers are correct, and I show you my numbers are correct. So there you go. There's your earnings per share of $6.56. I'll make it a little bit bigger for you guys at home. What I like about this one, at the end of this, I'm going to ask you which one do you think would be the best buy right now, okay? So I'm throwing a ton of information at you. At the end of this, I'll ask you guys all to you let me know what you think, and I'll tell you which one I think. Earnings per share, $5.56. So GM's making money, great. Their PE ratio is a shocking 5.82. You're talking a really, really low PE ratio, meaning that the price of General Motors is actually rather low compared to how much money they're earning. So we'll leave that one at that. The chart of General Motors we just looked at, and here's your GM, really traversing sideways, but I'm going to go weekly just to look at the bigger picture. Okay, so there is your chart going all the way back to 2010. A ways to go. We're about 50% off of its all-time highs. And maybe the electric vehicle space can help them achieve that and get back there. So that was Ford. We talked General Motors. Let's talk about the two Asian rivals, Toyota Motors. Right? You got the Prius out there. The one I joked many years ago. Looks like a suppository with 4 wheels. Not a big fan of the Prius, although I love Toyota. I am a Toyota fan. I have been I've been driving Toyotas for many, many, many years. This one's really shocking as well. Okay, I have to bring out my notes. I took a lot of notes on this, and this was crazy. General Motors earned $6.56 per share. Toyota earned $12.49 per share. That is a great payout. More importantly, they're paying a $4.99 dividend. So if you're looking for income streams, Toyota is probably a safe, stable way to go. Toyota's PE ratio, just so you guys have that in front of you. I know, the Prius. Toyota's PE ratio is 12.82. That's pretty low. So they got a PE ratio of 12.82, and they're earning $12.49 per share. That puts Toyota in a pretty interesting category for me. I think we all know and predict, like Tom says, you can calculate out their earnings. I think it's very stable to look at Toyota and say they should be doing this. It makes it a safer play, and they're giving you $4.99 on their dividend. Just to prove that, I will go here to this page and bring up TM, just so you guys can check that one out. There you go, $4.99 dividend yield. That's 3.23%. So you get an extra 3.23% per year by owning Toyota Motors, and their PE ratio and earnings per share are almost identical. Crazy to see such high numbers there for EPS and such low PE ratio. All right, last one, HMC, Honda Motor Corp, and then we'll look at Tesla. HMC. Okay, so here's your Honda Motors. So we've got an earnings per share of $2.76, PE ratio of 11, so it's slightly less valuation than Honda or Toyota. And they were paying a 2.91% dividend. Not bad. Let's see what HMC looks like. Now, I could bring up a lot of other companies. I know I'm not bringing up Volkswagen and all these other Porsche. It's fine. We're just doing this as an experiment. So Honda has been on a pretty good run since mid-2022. He's had a great run up from the lows of right around 21 bucks. Just peaked here a couple weeks back at a high price of right around 31. So you got a nice almost 50% move in the past, let's call it 9-10 months. Great. Looks fantastic, right? I like all of those. These companies I feel comfortable with because I know them. Lastly, let's look at Tesla. TSLA. Oops, how about A? So here's their PE ratio currently 79. Way higher than what you were witnessing on any of the other car companies that we have. Well, actually, I guess some of the other ones would be infinite, right? Because they have no earnings. But as ones that do have earnings, Tesla is very high. Notice, no forward dividend. They're not paying dividends. Why? Because it's going right back into the company for growth. You have earnings per share of $3.21. So with Tesla, and I didn't have the graphic here, but I pulled up something that I thought was interesting. Let me type it in here and see if I can bring it up for you real quick. I typed in companies that Tesla owns just to kind of see the list. And there was actually a huge list of companies that Tesla has been acquiring over the years. And let's see if I can bring them. Hopefully it shows like a list of what companies has Tesla acquired. Groman Engineering, Solar City, Parabix Machine, Maxwell Technologies, Hybar Systems, Deep Scale, ATW Automation, Silion, which is I'm sure a lithium ion company, Spring Power, and there's many more. You've got SpaceX, you've got Neuralink, you've got the Boring Company, quite a few different companies in there. And I think Starlink is separate. It's outside of the realm of that. So that's the reason that Tesla has that really high valuation. Again, it's a car company, but many are, like myself, would argue it's kind of a technology company because their AI is leaps and bounds above anybody except my brain just absolutely skipped a beat right there. Oh man, the company that's owned by Google. They're in Arizona. They actually run a fleet of cars in Arizona and in San Francisco. Waymo. They are leaps and bounds in front of everybody except Waymo, but they use different technologies. That said, that'll give them a huge competitive advantage. And I think whoever gets to the full 100% driverless car for the population will be the king. And I think that's why you have this 79 PE ratio, which personally, if Elon Musk can crack that by the end of the year, and he said we should have the full version of the totally driverless car available by the end of the year. If that happens, I think sales of Tesla are going to really surge even more. I know they're already there, but now you have to buy that extra $15,000 package. It's $15,000 to have that package that is full self-driverless car. I was looking at buying a Tesla. So you can buy it, that 15 grand extra. And there's going to be a lot of people like myself that I'm stubborn with my money. But if I have a car that 15 grand makes it fully driverless, I tell you what, I'm going to be traveling a lot more, and I'm going to be doing almost all of it on autopilot. And I think that's really going to change the game for Tesla and put them and that's why, again, I think you have that 79 PE ratio. So if we look at this list over here, and I'm just curious if you guys, if I put a gun to your head and said, hey, you have to buy one of the companies I mentioned today. Is it Acromoda, Nikola, Lordstown, Faraday, Canoe, Workhorse, Haleon, Petrera, Lion, Rivian, Lucid, Neo, Xpeng, Fisker? Is it Toyota? Is it Honda? Is it General Motors? Is it Ford? Or is it Tesla? And if you do pick one of those, just type in why. I'm curious. And I'll let this go for just a minute or two, and we'll probably wrap up our discussion on this. I know it's gone a little bit long. I apologize. But if I had to pick one, it's tough for me. I kind of put myself in threes here. Actually, I have four contenders for me personally. Lisa says Tesla number one, Toyota second. Yeah, they're on my list. My four would be in order. Oh, that's tough. I have just different. I don't know if I could put them in order. It would be Ford. Ford's not on my list. It would be General Motors, Toyota, Canoe, and Tesla. Those would be the four that I'd be looking at. Tesla, because I want to be holding some of that lead dog right now, as I think they're going to continue to assert their dominance. I mean, they have 2 cars in the top 25 selling vehicles in the United States. That's pretty impressive for a car company as young as they are. Number 2 would be General Motors. That PE ratio of 5.82 is very appealing to me. You know, I don't think General Motors is struggling that bad. I'd probably want to do a little bit more fundamental research, but GM, boy, it looks tasty. $6.56 per share earnings, and they pay a 36-cent dividend and a PE ratio under 6. Oh, man, that's pretty attractive. That's really attractive. I got Toyota. Toyota, I feel comfortable with because I know them. I love them. I know that every single person here would agree with me in saying that Toyota's not going away. Toyota makes a very reliable, economical vehicle. Great. I like that consistency in a portfolio. And if they're making $12 per share with a PE ratio under 13 and they're giving me a $4.99 dividend for that, I might have some Toyota in there. And then the last one would be pure speculation, and that will be the Canoe. Only because it's radical. It's so different. I think it has a lot of user applications. I think anybody who's doing delivery would love to have that kind of vehicle. And then for me, I'm not as adventurous as I used to be by any stretch, but I do like the outdoors. I like going on road trips and things like that. A car like that Canoe, I think, really would be a great vehicle for that. So my 4 would be Toyota, General Motors, Canoe, and Tesla. And if I had to pick a number 1, I guess I would have to ask you, what's my goal? Is my goal for income streams? Is my goal for growth? Is my goal speculation? Speculation, go EV. Growth, I would say go EV or Tesla. For income and stability, it's going to be Toyota and General Motors. I think General Motors could have a pretty nice run here. Their PE ratio is just ridiculously low. All right, so what did a lot of you say? A lot of you said Tesla, General Motors, Rivian. Mary said Rivian. Okay. The only issue with Rivian is they're struggling, right? They still have not turned a profit. They're in a rough spot. So I got no dividend coming in. They're losing money, and the share price doesn't look really good. So that wouldn't make my top 4, but again, trading works because everyone has opinions on it. Just know that they're struggling right now. The goal and hope is they make it through that push so they can become mainstream. Pepe says Ford, and I could see Ford, the one with the best chart, California. That's a good one. So out of those 4 that I just mentioned for myself, let's see, this is the weekly right here. So I'll start with, let's go Toyota Motors. Okay, since 2015, looks great. Yes, we're off the high, but looks decent. Let's go General Motors. It's a little worse than Toyota. Let's go EV. Okay, that's definitely not going to take it. And then, so it's either going to be between, if California is correct in saying the one with the best chart, out of my 4, you're probably going to say Tesla or Toyota, just based off the charts. Lisa says Tesla can't fight the Kool-Aid. Yeah, I know. And he is just such a enigmatic guy. He's crazy. I don't know if you guys have seen the recent thing that he challenged Mark Zuckerberg to an MMA fight, which would be crazy to see. And now it's actually exploding. So Elon Musk is now in training, doing Brazilian Jiu-Jitsu with Lex Friedman and George St. Pierre, who's one of the best MMA fighters of all time. They're now training Elon Musk to fight Mark Zuckerberg. And Mark Zuckerberg has been winning tournaments for Brazilian Jiu-Jitsu. So I tell you what, I will be paying to watch that on pay-per-view. I hope that what they do is I hope that they say all proceeds go to some good charity or a basket of charities. That would make it worthwhile as opposed to just greedy capitalists. But boy, that's going to be a fun one to watch. Those two in a ring doing MMA. Mark Zuckerberg is 5'7", 150 pounds. Elon Musk is 6'1", 220, 210, somewhere in there. So Elon Musk even commented, he says, I've got a great move called the Walrus, where I just lay on an opponent and prevent him from moving. I was like, man, Elon, you're great. Anyway, sorry, I'm going up. Pepe says General Motors, Ford, and Tesla. Cool, okay. Tom says General Motor Cruise has a fleet of driverless in San Francisco, Austin, and Phoenix already operating. Yeah. The thing with those is they've gotten approval for autonomy. So same with Waymo, right? So Waymo has fully autonomous vehicles, but it's only in the city. They're not allowed to go on any of the highways or freeways, which is interesting. You would think it's safer to drive on the highway or the freeway versus a city, right? No pedestrians and things like that. But Tesla, I think, is going to crack that nut first and have the fully driverless one, which would be really, really cool. Man, I would be doing so many more trips. So many more trips. Bigger are they, harder they fall. Yeah. You know, Elon Musk is 52. What's Zuckerberg? He's got to be mid-40s, right? He's got to be 40-something. They're not that big of a difference. California says Tesla and Toyota Motors. Anyway, Tesla, revolutionary. Elon, in EV segment, most models have worked. Yeah, I agree, Rahman, sorry. Rahman, there you go. I agree with you. You know, he started off with a car that I thought looked kind of silly. Now that I've gotten in him, I like him. But, you know, Tom made a point, I don't know if it was in the email he sent to me or just mentioned it here. Typically, there's a lifespan for a style of car. You know, and I think about now, Tesla is due for that upgrade in the style. Now, granted, they have the Model Y. They have the 3, which are two that are on the top 25 selling list. You have the Model S, and then you're going to have the truck out soon, hopefully maybe this year, maybe next year. But they're going to have more and more vehicle styles. But they'll have to start redoing some of their model lines. But knowing them, they'll probably continue to ride as long as possible until finally they're forced to make new changes to their production line. So that was my long-winded show on EV. It's interesting. I still think that there's a lot of competition coming from the mainstream automakers. You know, thank you, Chris, for letting me know that Polestar was from Volvo. Did not know that. It makes sense because it has a Volvo-ish look to it. But every major car company is getting in the arena. Therefore, one of the main things I'm looking for now is disruptors. And a disruptor for me would be somebody like Workhorse or Canoe with just a radically different model. I really hope that Canoe makes it. I could see those things on the streets all the time. That'd be pretty cool. Musk and Zuckerberg should do a sumo wrestling style. First one out of the ring loses. Bragging rights to the winner. Yeah, now they're going to do a fight. And if the fight was to happen today, I'd put whatever wager I had on Zuckerberg, even though he's way smaller. I mean, he's 50 pounds less than Elon Musk. But he's also a Brazilian jiu-jitsu. I don't know if he's a black belt yet, but he's pretty high up on the list of belts as far as Brazilian jiu-jitsu, and you don't mess with those guys. You know, somebody knows some jiu-jitsu will take you out quickly, and Elon Musk doesn't do any exercise. Thanks, Big Ab. I thought it's something that I wanted to just show the scope, you know, and it's interesting when you look at this huge list. We talk about so many competitors to Tesla back in the day, and there's been a lot of companies that have stepped up and tried to fight, and they didn't make it. You know, the verdict is still out whether they will ultimately make it, and I think on this list, some of these might be very enticing opportunities. You know, some are very low priced right now. And it doesn't mean the Rivian's going bankrupt. It just means it's had a brutal fight. It's been hemorrhaging money and people haven't seen them turn a profit yet. Now, if they do, because I like the Rivian truck, I think it looks pretty darn good, except for those clown looking headlights, then, you know, we could start to see Rivian's share price turn around and move to the upside. But right now, you know, this chart, this is the weekly of Rivian. I hate to say it, it doesn't look much worse. You know, the only saving grace you could say here is, oh, it's going sideways recently, right? You've seen it base. It doesn't look like it's going below this, you know, $12 mark. Okay, fine. Other than that, it's still struggling. So keep your eye on the earnings. If you start to see the earnings numbers tick up a little bit for Rivian or Lucid or NIO or some of these other ones, then you could really see some of these companies come back to life. We'll see. If Zach loses, stock will go down. Well, you know, the concern here is there is the possibility for serious injury, right? They are going to have gloves on. They will most likely, I'm assuming they're going to be wearing headgear, which would kind of be, I don't think they should wear headgear, but they probably will. Imagine if he knocks him on the noggin and causes some serious mental injury to Elon Musk or Actually, I don't know if Zuckerberg is really running things as much as Elon Musk is running his companies, but who knows? I'm not into day-to-day, but either way, I'll watch it. Polestar's not on that list, right? Talking Monkey, he mentioned that when Polestar is Volvo, which I did not know that until today, so thank you for the info. But yeah, it's not on that list, and I have seen a couple of them around, but they're not really popular yet. And they're in California, so I kind of would expect to see a lot more of those on the road here. Okay, let me wrap. Holy cow, man, we went long today on that topic. Well, you guys are interested, I guess, because you asked me questions. So let me real quickly do a recap of our top 8. Bitcoin got a little bit of a kick today to the downside, down 1.94%, dropped to 30,000. We'll see if it ticks there. Remember, all the talk has been, it's the last time it's ever going to be below 30,000. No, it could easily drop down below 30,000. Let's see. Gold, we'll call it unchanged on the day, although it's a hammer formation into a demand zone after a long downtrend. I'm telling you, those types of patterns get really powerful. So I actually like this one today. The only thing that I didn't see on it that was would have added a little bit of extra flair to the trade would have been a really high spike in volume today. We didn't get that on gold, but you do have a long pronounced downtrend into demand zone, hammer formation. The way to play that is wait for it to break above the high of today. The high of today's candle was 1,926. So wait for it to tick above that tomorrow, and then that might be a nice long opportunity if it does bounce, right? Could certainly continue on down. S&P 500 unchanged on the day, little spinning top just as we're about to retrace back to that overhead supply zone, so nothing that interesting there. The 10-year, I can move on from that. I mean, you just basically have these big up days followed by a big down day. Actually, 2 up days followed by a big down day. This seems to be the MO here. So that means that tomorrow should be another up day, and then we'll have a big down day. NASDAQ, 4th place, up 0.12%. So not a lot of real clear movement out in today's market. A lot of indecision as things really didn't have a lot of direction. You finished at 15,130. Russell 2000 was the best performer for the indexes, up 0.44%, closing at 1874. Again, I still think it's in no man's land. Probably going to rally back and drift back up here, but I don't see anything really that critical on it. Dollar index up 0.46%. We have seen it stabilize just a little bit. Further upside movement to this means it gets to right on 103.50. If it does, you'll see more downside for the equity market. So keep your eye on the dollar tomorrow. And lastly, crude oil, 2.75% pop today, although who cares? It was down that much yesterday, so it basically just earned back what it lost yesterday. Okay, let me read the last minute couple of questions here. I'm going to get out before an hour show. I was not planning on it. Mike says, if you have 2-factor authentication to your phone, doesn't that guarantee that your Venmo account cannot be hacked? No, nothing guarantees. So what they're doing now is, not now, it's been a popular thing. It's called SIM card spoofing. So what'll happen is somebody, and they've cracked down on this at the phone companies, but they will call in. They somehow got some of your personal information. And whether you would want to admit it or not, all of us have some personal information that's been drifting around online. If you don't want to, hold on 1 second as I bring up something here real quick. For those of you who are like me and are very curious about kind of what happens in the dark underbelly of the dark web and crime syndicates around the world, I want you guys to take the time and listen to this podcast. I can't remember which one it was. I'm going to look it up here real quick. It was excellent. It was all about, is it Most Wanted? I think it's what called like the most, Brett Johnson. Okay.
It took the family.
So this podcast, if you guys have, it's 3 hours and 47 minutes. 3 hours and 47 minutes, but I was absolutely captivated by this interview. I couldn't believe it. This will be a movie someday. But this guy, Brett Johnson, was the U.S. most wanted cyber criminal, and he starts talking about how they're buying all this data and they're using all these different tools and techniques and crazy things to get your information. So to get to your question, Michael, it's really that people can get some information and they just need basic info, and they call up your phone company and go, they'll spoof your name. So, this is Merlin Rothfeld. My address is this, and here's my phone number. Okay, yeah, I want to transfer my phone number over from this SIM to this SIM. And as soon as they do that, they now control all your stuff, and they can get into your accounts with your 2-factor authentication. So it's SIM card spoofing. I know that they're asking for more information now on the phone company places with regards to that, but I don't think anything is 100% safe. You should always use 2-factor authentication. Be very careful with Venmo. I've seen different hacks and scams with Venmo. Is that the URL above? Yes. Lisa, that's the URL to the Brett Johnson interview with Lex Friedman. Again, it's almost 4 hours. But if you're on a road trip or you drive a lot, it is fascinating. I listened to it when I drove to Northern California. I almost wanted to listen to it twice because it's crazy. I'll ruin part of it, but the guy is just a total dirtbag. But then he kind of develops a conscience, he gets busted, and now he's actually helping government agencies stop cyber criminals. He's come full circle. So anyway, that's what you get for not planning. Yeah. Net earning just before hitting gold demand is not high, probable trade for not high. You mean that the couple days where traverse side is right above the demand zone? It certainly takes away from the strength of that demand zone, but I would still be one of those guys that will take it. So I'm going to see what happens out there tomorrow. Okay, as far as economic calendar and earnings calendar, I did not look up any stuff for today's show. Apologize for that, but I will bring it up for you right now because why not? I'm still going to be under an hour. I got a couple minutes left, a minute or two left. So let me go to your earnings calendar for tomorrow. Here we go. This is for today. You had Micron Technologies. They beat earnings. You have Nike reporting tomorrow. Just so you guys know, the goddess of victory in Greek mythology was Nike. Just so you know that. Rite Aid, McCormick and Company coming out with earnings tomorrow. And then if you go to Forex Factory, which I don't have that one up either, bring up Forex Factory and let's look at tomorrow's economic data because there is stuff coming out for Thursday, which I want to make sure you guys pay attention to. One that we already know, which is the final GDP numbers, but you also have the pending home sales numbers. And again, I made a point yesterday talking about the housing. The pending home sales numbers will be interesting. They're expecting a decline there. And otherwise, that's really the most important piece for tomorrow. You do have final GDP as well for the UK, but that's going to happen after our show tomorrow. Just like the movie Catch Me If You Can, crook turned good guy. Yep. Yeah, it's almost the same thing, but way more sinister and way more interesting because when I look at that interview with Brett Johnson is, I don't know, for me, I like tech stuff. And I always wonder what goes on in the dark web and et cetera. Is it an hour show? It's not an hour show. I've got like 30 seconds left, so I'm going to cut it out before then. Anyway, that's going to do it for today's show. I don't want to do an hour show and give you all the satisfaction. So email me at TraderMerlin@gmail.com if you guys have any questions or put comments down below YouTube videos, and I will see you guys all on Friday or Thursday's show. Take care, everybody. I'll see you tomorrow. 59-minute show. Neener. I'm out.